I'm Adrian. I'm the CEO and co-founder of Chargehound. I'd like to introduce today's guest, Klas Bäck. Again, probably very familiar for many of you. Klas is a bit of a legend in the payments industry. He's been on both sides, right, as in the merchant world, as well as obviously on the payment service provider world. He's currently a VP at PayPal, overseeing global strategy and business development. If some of you don't know, Klas, I think, is really one of the people that really understands what merchants are trying to do and problems that they come up against, and tries to think creatively about and advocate for technology solutions to drive things forward. I think no one will ever claim that he is not straightforward and clear about the sorts of things that he's interested in and things he thinks are worth advocating for. And I think the more I work in payments, I think the more powerful that perspective really is. And I think people really respect that sort of honesty and straightforwardness. So welcome, Klas. Happy to have you here.
You're too kind. I think I have mostly the benefit of being in the industry for a long time and met a lot of smart people, and some of their knowledge rubbed off on me, and now I can turn around and say I know all this, but I learned it from someone else. So.
Truthfully, yeah. Today's conversation, we're going to focus on 2021 big payment challenges, and like I said, highlighting kind of questions that you all have submitted. 2021, obviously, we're hoping is a different year and goes in a different direction than 2020 on many levels. But I think what we're seeing right now is sort of spectacular growth demands around growth. But just for you, Klas, what are the trends that you're seeing for particularly these sort of global merchants now? And if you have any insights around payments, obviously, but also fraud in particular.
Yeah, sure. I mean, let's start with the payment side. I think there are a couple of ones. I would probably start with a rush of moving to digitalization. I think a lot of companies have, either because they want to or because they're forced to, like if you're a restaurant chain, let's say, moving into a different environment where the legacy infrastructure doesn't support what they need to do. And therefore, they need to push things, most likely in all the cases, to the cloud, and maybe using different types of vendors and unbundling some of the stack, and a lot of changes that comes with that. So that will be number one. I think we'll cover off some of the more details of that later on during the chat today. The second will be probably more what I think of as mobile plus. Like, there are of course many companies that still have ways to go to make their mobile experiences better, but I think people are moving around more, maybe at home as well, and are using mobile devices as a way of engaging with most of their brands more so than the PCs, even at home. How can I create a better experience? How can I create something more than just the payments, right? Whatever that may be. And I think that again drives a need for changing infrastructure, maybe changing vendors, maybe changing the flow and the interaction that they have with their customer base. And that kind of leads into the third example that we use when we're talking about payments, which would be on the omni-channel side for those who have physical outlets, right? How do I create an experience where I can connect an online persona with someone on a mobile device, being on the way to picking up food or something I bought online, and how can I make that experience better, more seamless? How can I build a relationship with that customer over time, right? So I think pretty big macro changes on a CEO level that a lot of people need to take on. Sometimes payments is the enabler, sometimes payments will be the blocker, depending a little bit on the infrastructure that comes into play. On the fraud side, to cover off that quickly, I think personally, I think we've seen a lot of work around leveraging new technology, obviously buzzwords, but AI and machine learning around risk monitoring, management, operational optimization. Like, how can I take, you guys are a great example, how can I take a repetitive task, move them away from having people doing it to making a system doing it better, more efficiently, scale up, scale down. As an example, within PayPal, we have done some interesting things about machine learning and predicting outcomes, and therefore not necessarily relying on the tools. What if I can predict the expiration date on a credit card? Should I put that in? Stuff like that, that could be very helpful, that drive either lower fraud or more transactions, as the case may be.
Yeah, no, for sure. Those are excellent points. I think one of the things that you mentioned about mobile to me is just, we talk about, purchases on mobile, and that's historically been at sort of this exciting, second shopping cart or second screen or whatever. But really, I feel like in the pandemic and moving onwards, it's like, no, this is the device now that people want to purchase on, whether they're in store or at home or watching TV. And so, this sense of it being sort of like an added bonus or, second opportunity to capture commerce is sort of giving way to this idea that, no, this is often now how customers are going to be buying things, full stop, right? Which feels like a kind of a big change.
Right, and I think that also opened the opportunity to create better experiences, because with the mobile devices you can have more information, you can have other tools that you don't need to enter as much information as part of the experience of buying something. And we already covered some of the fraud tools. You may have more data that actually reduce the risk. So I think it just opened up a lot of opportunities to do things quite differently, to the benefit and the positive feedback from the consumer as a result.
Cool. Yeah. I think like one of the things that, again, in 2020, with just the huge surge in online transactions in general, I'd love to get your perspective on, specifically inside of fraud, the non-chargeback flavor. Is that, is the world very different now for the fraud world, or is it just a lot more of the same? Or, are there things that are really sort of uniquely specific about what we're seeing?
I think, as always, it obviously depends quite a lot who you are and what you're selling. Some companies obviously have the unfortunate luck of selling things that are much more attractive to steal or resell. But I think for me, that what we've seen maybe, which is always a little bit part of a recession, you do see a little bit more of friendly fraud, perhaps, right? People don't necessarily have the money to back it up, or they start looking at their expenses and they can't be bothered canceling a subscription or a vaulted transaction or whatever have you, and they just do a chargeback. So I see a little bit uptick in that. That would probably be the one thing that's standing up. I do think also some verticals, restaurants, food, they're moving into a digital world in a way that's very new for them, or very different. And as always, a lot of people figure out they actually don't really need to pay for this, and there are really limited consequences. So I'm just going to do a chargeback on the $200 restaurant order I just did, right? So I think some companies, maybe because they're getting newer to that concept, is getting hit harder than some other industries. I don't know if we necessarily see more in the traditional space. Obviously their volume may have spiked or gone down,
but it's tracking with transaction.
Exactly.
Yeah, I think on that, talking about restaurants, I think this kind of transitions into what I wanted to talk a little bit about, is good old BOPUS, right? Buy online, pick up in store, heralded as sort of like this huge thing for the big box stores, a few years ago. Well, now, right, every restaurant is a BOPUS, right? I think I'd love to get your thoughts a bit more on, like, how is that, from what you've seen, has that been a success? Have there been major challenges, or anything there would be interesting, I think.
A couple of nuances there. Some of that is somewhat reflection of my consumer spending habit, maybe more than anything else. But I think the smaller restaurants or the non-chain restaurants, as an example, if we stick with that, obviously they'll be different on retail, and we can look back on that. But on the smaller restaurants, I think a lot of them can do really well with the experiences that are more manual, and it works okay. I think if you, at least my experience, some of them more chain places you go to, and they're running around between locations within the restaurant with basically paper, not that great experience, even though they may have a good parking lot. You can just sit there with 50 other people waiting for it. So I think they are struggling still in order to just changing the environment to to better facilitate that, and don't use paper or worse, write things down in between and then have errors. So I think all that had then led to that third parties, of course, picked up the slack, the DoorDash and Uber Eats of the world, and Grubhub and all the others, and even some of the bigger restaurants who have done third-party deals or run their own delivery services. I think, but if you stick on the third party, other people step in, create better experiences than the restaurants can do, which is good. That gives them all the orders, that keeps them afloat. But that comes with a very steep price in terms of who takes the margin of that transaction. So how am I going to get that back after post-COVID would then be a concern. And I think to some degree that's true in some verticals on the retail space as well. There are other new startups or other companies coming in and saying, let me do that.
Yeah.
Which is great in the short term when you don't have that capability, but maybe
there's margin there that you're losing.
Quite painful in the long term from a margin and operational perspective. And you, of course, are not in the control of the experience anymore. So if they do a poor job, it reflects on you and how you.
Yeah, you're the one that hears. You get the Yelp review. You know, your fulfillment company is not, getting the Yelp review. I think for me, one of the fascinating things about Boppus is that like it really condenses the time and the flow from sort of transaction to fulfillment process. And so whereas like, historically you buy something online, there's a whole flow. They're like, hey, we're going to ship this to you. But if I buy something online and I want to pick it up in store, that could be within an hour, right? Yep. And the merchant obviously has incentive to try and, move this freight as fast as possible. But, as we know, right, that introduces this complexity. And so as we condense this sort of time frame there and meld those things together, I think there's an interesting opportunity for vendors and payment processors and sort of the service backbone to step in there and really try to empathize with that. How can we make that super seamless and super viable even for like a small restaurant or whatever?
Yeah, or even a grocery chain. I think in the beginning, again, speaking more from a consumer experience than maybe data that I've seen, but in the beginning of COVID, I think some of the supermarkets moved into a world where, okay, don't go and buy groceries from Amazon, buy them from us, and you can pick it up, and we won't charge you for it. And I think when the volume was enough, like just text us when you're in the parking lot, we come out with it, worked pretty well. Then the volume start going up, and you show up, and like, oh, first of all, there's nowhere to park in where you're supposed to be, and then I texted and no one shows up. No, it's not so fun anymore. So and they're running that on paper, right? I think if you compare that with someone like Target, I think they did a pretty good job of actually having, at least where I live, infrastructure that would be funny enough in little tent outside and the little person
have it ready for you
sitting there, but at least they had it digitalized so they could manage the flow as it grew and scale quite better. So I think it's really all over the place depending on the abilities of the different companies to adjust to their new realities.
For sure. Talk to me a little bit about, I know PayPal is really big on QR codes and, sort of touchless payment in general, but, I think a lot of people for a long time didn't quite get touchless payment. I being one of them. For years, I was like, why would I ever use this Apple Touch Pay thing? I'm just going to get my credit card out. And now, I can't live without it. So, talk to me a little bit about that world.
Yeah, I mean, for sure, PayPal and many others making big investments into QR codes. I think there's two drivers. One, I think COVID had driven a scenario where people just don't want physical contact with terminals in the store, of course. That's pretty obvious. But I think what's really interesting about QR codes in general is the fact that you can embed more information as part of the experience. So is it really about payment? Not necessarily. It's about creating better experiences, whatever that may be, right? My son's birthday was yesterday. We went to a restaurant and there was a QR code on the receipt. You scan it and then you get the receipt. It automatically take care of adding the tip. You may find that a good thing or a bad thing, but whatever. But like very, very basic, but you still start building a better experience, and then you get a digital receipt, etc. So I think you will see a lot more of that, where people can just create different experiences, and they could be several steps. Right? It could be if we seem to talk a lot about food, maybe that's because of the alcohol. But as an example, I scanned the QR code to get the menu. I can even order in some of the chain restaurants now the food, and then I can close out the tap, right? So it's a multi-step experience that QR codes enable. And I think people will be very creative with that moving forward.
That's fascinating. So I feel for me then the way I think about that is that, we sort of tend to assume that transaction, get the credit card, get the payment, render the service is sort of the end goal. But actually with things like QR codes and touchless payments, actually that's the table stakes now that, we can do that pretty well. And, what can we do with technology on top of that to like sort of expand it and make it a richer, like you said, a richer customer experience. It seems to suggest that that's where the demand is going to be from consumers is, of course, you can take payment from my phone or from my credit card or whatever, but what else can you do for me, right? How else can you make this experience better?
Yeah, and even if it's no benefit and it's very frictionless, what is it worth to you if you can capture the consumer's email in that? Again, now we're more like an unknown person buying something in some context, but what if 25% of them do select the QR code? You do therefore have the opportunity to collect their email address. You do therefore have the opportunity to communicate with them in the future.
And do more.
Super basic, but it's the stepping stone for building richer experiences and a relationship from an ongoing basis.
So with that in mind, are physical credit cards done? Are they over? And if they're not done now, will they be? And if so, when?
Yeah, I mean, it's a great question. I think maybe I've been along long enough, but I know other people have on this call as well. But if you come, I think they're done. The question is how long is it going to take, right? Because how many places still needed the physical version? But if you travel in the past, you used to have all these loyalty and rewards card, and even restaurants like Subway and places like that were really big, Starbucks. You needed all those physical cards. They're all gone now. Why would you need it on a mobile device? So as long as enough places can support an environment where you can pay without your credit card, I think if that goes quick, credit cards go quick. I mean, I don't bring credit card anymore. I try to memorize all the food places and where you can buy with Apple Pay or QR codes. So that you don't need to bring the wallet, right? And I think during COVID, it's almost like I don't remember where my wallet is sometimes. I'm so used to not having it, mostly because you don't go out as much. But still, like I think it will go away, and if nothing else, you put it on the mobile device as an intermediate, right?
Cool. Yeah, that's interesting. All right, I want to open up a poll question. Meredith's really excited about this using the poll technology, so we're going to do it. Are we the poll question, or do you want to do this, Meredith, or should I? How are you feeling about this?
I'm attempting to open it, but we might just have to do it by raise of hand.
Okay. All right. Let's do it by a show of hands. This is new tech. This is new Zoom tech called using your hands.
You can add a reaction to your. You can add a hand raise reaction.
I'm too old for that, but
like that.
There we go. Okay. You raise your virtual hand or just your regular old hands, whichever is easier for you. Are we in a major change moment that forces the rapid adoption of new payment tech? Yes or no? If it's a yes, let's see thumbs up or hands up. Show of hands. All right. And then for all my haters in the chat, who does not think we are in a major change moment? Any thumbs down? Any boo hisses?
They have a thumbs down? Mine doesn't.
Well, maybe it's,
I mean, I'm not going to use it.
You got one of the other camp. I think this.
Adrian?
Yeah?
I kind of wonder, like, since I'm in the B2B space now, what's interesting is they tend, in my observation, they lag a bit behind B2C. So one might argue that in the B2B space, we're not really in a boom yet.
But not yet, yeah. Interesting. It's a good point. Cool. Well, so I think it's pretty clear though, at least on B2C side, pretty strong sentiment that things really have changed. On things changing, I think it's the speed of change that has caught some merchants off guard. Others, maybe have adapted quickly. But kind of to that point, Klas, one question I have for you is how important are things like AI and sort of solutions like that scale decision making for merchants that you see or that you see in the payment space?
All right, I got muted. I think it's quite important, and there's a lot of different tools and companies out there that solve a lot of different problems, whether it's a Chargehound or some of the risk tools that we talked about before. But I just think there's so many opportunities to improve the flows, and even if you have very basic things like creating rules and have benchmark versus your peers or what's good, what's bad, I think you can build some really good tools, and there are companies that have done that people take advantage of. They just create a better experience and it costs less. And I think that's part of a broader shift that's not necessarily about payments in technology, where you used to buy software and spend a lot of money installing it and running it as long as you possibly could to justify the price. And then you went over to an API model and a little bit of an early Salesforce.com model where you buy some kind of combination of software and usage base. And to a lot of companies now, for a lot of these new technologies, and I know a lot of the companies on this call are already start using some of them, you basically go online on their website and buy based on consumption. So it's completely tied to that, and it's very easy to implement some of these tools because you don't really need to make a big software and IT investment. You can just be the payment manager, go and say, I'm going to try this tool out and I'm going to pay, whatever. Sometimes it's like $2.99 a month, or sometimes it's, a fee per API call that you would do as part of that transaction. I think that very quickly transform a lot of people's technology stacks in a lot of different places across the whole organization.
And just to be clear, our service is not $2.99 a month. If anyone's trying to infer that or back channel that, he's talking about something else. Those are really good points. I think that the thing that sort of astounds me is for merchants that are built for scale and are really heavily invested in things like AI, and they're invested in APIs, and obviously we slot into those conversations, but it's really the speed of learning, right? That they are able to very quickly synthesize a trend or a moment. I think COVID was like a really perfect example of this, that the difference between even merchants that we work with, right? The difference between the merchants who just had it all sort of in aggregate at their fingertips to really understand the picture, right? Of what had happened, what was going to happen, and the speed at which it was going to happen, completely, were able to take advantage of that. And merchants that, I think were a little bit behind, it's not necessarily like it's the end of the world for them. It's just they're a little bit behind. So that piece definitely resonates with me, at least for what we've seen. All right. Some other questions that I have for you in the chargeback world, I guess, just because that's obviously my particular point of interest. When we truly arrive at the post-COVID world, which I'm hoping is soon for everyone, do you see do you see a return to more brick and mortar shopping, as we go back to it? And in any case, do you think there will be sort of a false spike in chargeback rates for digital merchants as people come back to brick and mortar, or no?
I mean, it definitely is going to go down, but it's going to be, I think all the data is clearly indicating that it would be a lot higher than what it was before. So you have accelerated a shift that's what's happening for many years to mobile digital scenarios where payment often get built into something else versus being a freestanding activity. So that's for sure is going to happen. And then when you do have that sort of spike up and spike down, even if nothing changes, the ratio may be off. And if you're some verticals where you're running, let's say, very close to the scheme's trigger points, that may cause these problems. And I'm personally quite curious on how Visa and MasterCard are gonna deal with that. Like, okay, now your data shifted quite a lot. I may suddenly accidentally trigger the numbers for hitting MasterCard's match list and stuff like that. And now what, right? Like, it's not necessarily correct. It's just a function of the tools that are being in place to monitor some of that. And once you're on the list, it's not trivial to unwind you, even though MasterCard was wrong, right? So.
Right.
But you probably see a lot more of that than we do, and I do. So you probably have much more deeper insights in that.
there's a lot going on in the chargeback world in there post-COVID for sure. I think chargebacks, probably every single merchant on this call knows the frustration of consumers using chargebacks as the refund policy process. Or this shoe did not fit and I'm too lazy to ship it back, so I'm going to ring this up as a chargeback. So I think again, something we talk about a lot to our merchants, especially on e-tailers, right, is that, hey, when you have a big surge in transactions, like you're one, FedEx or UPS or USPS, fulfillment issue away from chargebacks that you have very little control over, right, and that are not really your fault. I think a lot of things have calibrated, obviously, since last March, but I think merchants that had only 10 to 20% of their volumes online in 2019 and now have 80% of their volumes online, they are definitely experiencing growing pains.
And then you combine that with some of those companies have very old legacy system that can't really provide the experiences that consumers and customers are expecting, right? You make it quite hard to cancel. Well, okay, I think the consumers are trained enough to be, okay, if you're going to play it that way, I'm going to do a chargeback because I don't have an hour to figure out how I'm going to cancel this, right?
Yes. It becomes very antagonistic super quickly, for sure.
Correct.
And that's why I think, again, that this sort of speed of learning that like we're really seeing is about, and just tying into this piece you're talking about QR codes, is transaction is table stakes now, and extending and understanding all the ramifications of what happens after a charge transacts and trying to holistically sort of deliver this experience to a customer, I think, is where a lot of these things are going. And if I for example, I'm just stuck on Apple Pay now, probably forever. And so if I can't pay with Apple Pay, I'm not gonna use your service, or I'm not, when I'm out on the street or whatever. And I think that things like that are super pronounced right now. So.
Yeah, I mean, I do think it impacts. I know personally, I know which of the different supermarket stores that can do contactless and which cannot. Like, is that a big thing? Am I unusual? Probably, being in the payment space, but there's still people who select like that. And if you don't have infrastructure to support it, it does now cost you sales, right? There's no way around it. And same with coffee shops and other chains like that.
For sure. Yeah. I think the last thing before we kind of I think open up to the rest of the crowd that I kind of want to go over is just, for you, I feel like you really the whole system very well and all the different players. We've been talking a lot about merchants and payment processors, but tell me about issuers, and tell me maybe about acquirers, and what is the world like for them, and what pressures are they seeing, or what solutions are they looking to accommodate for, since obviously they are also impacted by all this.
Yeah, absolutely. I mean, I think on the bank sides, for those who are owned by banks, obviously there is a lot of challenges to the banks. We can all argue how successful they're all going to be, but there is activities to sort of disconnect the traditional retail banks from the consumers. I think there are a lot of companies that are building quite successfully ecosystem where the banks no longer can penetrate the banking accounts, right? Whether I'm a Uber driver and Uber actually build an experience around that, or many other companies that have done something similar as part of their marketplace interface. So people are taking things away from the market. That will be challenging. I think from an acquiring landscape, both in Europe and in the US, there have been sort of super roll up of the industry. So mega merger, lots of different platforms and super old technology, not trivial to be fast footed to react to what's happening. And that slows them down, creates opportunity for startup entries and new ways of thinking about it, combining that with the ecosystem that comes with all the marketplace platforms, to open up new ways of thinking about those experiences. And I think if you follow venture capital money, you can see a lot of money being pushed into that. How big would that be 5-10 years from now? I guess it remains to be seen. But if you go back a few years, take a very concrete example, I think everyone was predicting Amazon doing a little bit like a Walmart taking over retail transaction. But then you compare that what someone like Shopify have done over the last 2-3 years.
I was just gonna
massive
say.
growth of smaller companies going directly. I think that surprises some analysts. So I do think it's just easier to manage and execute for a lot of those companies than the legacy providers would be. And to some degree, I think that's true on the issuer side as well, right? And I don't know how much you see on the short side on some of these, but on PayPal side, both being sort of merchant record for our wallet business and then for our merchant services business, we have 30 million merchants on that and doing $1 trillion combined. There's a lot of issuers. If you actually really look at our data in terms of authorization rates or fraud or chargebacks on an issue by issue basis, there are some issuers who are always behind on doing the scheme mandates. So it's like scheme says you must do this as an acquirer or you're not in compliance. I do this, and then issuer Y actually haven't met their criteria, and I see a lot of decline that negatively impacts. So issuers are struggling a little bit too with keeping up with all the technology and some consolidation as well. And maybe in some cases being spun out from banks, not so much in the US perhaps, but some other markets, traditionally banking business versus now being spun out to third party or so.
Yeah, no, that's interesting. Definitely, I think anyone is able to sell globally now, and that puts a real stress on the issuing banks and the acquirers to think about how, like, I think Europe is a great example of a world where traditionally we haven't done much business because people were like, well, Europeans don't really use credit cards. But, you know, over the last 4 years, that is not true anymore. And the issuing banks and acquiring banks are experiencing growing pains, right? Reacting to that. So
for sure.